Hello and welcome at Stocks Advisor. Today we will talk about PACCAR Incorporated, traded at Nasdaq, ticker name PCAR. And today we saw a slight decline, minus 0.3%, finishing at 81.85. And overall we see descending, and the question is, what's next? What are we going to see here? Are we going to continue downtrend, and how to trade actually here? Well, to understand this and answer those questions, let's quickly first understand the overall happening. So what's happening here? What is the situation? For this, we need to look at the bigger scale. We see that overall, starting from 2020 May, we saw some nice increase, but from February of this year, there is a clear decline taking place. And actually, after having kind of, let's say, flag that was formed here from February all the way till mid of June, we see now a negative channel formation. So after we touch this long strong line of around 90, it was formed already August previous year, and was first quite strong resistance, worked as support from February. The price was bouncing, but it was kind of attached to it, and this is usually clear indication of further breakout downwards. And that's exactly what happened here. We see that from June, we have now a negative channel formation, and this channel is still ongoing. You can clearly see here formed right these levels and continuing. What is interesting though, at the moment we have touched today the bottom and slightly rebounds from it. We see some, let's say neutral activity after hours, being still 81.85 with some positive negative volatility. So what still might happen, because we also MACD wise forming a negative wave, it's not like still at the bottom. We might go a little bit lower, maybe a secondary wave will form, and only then we will pierce upwards. RSI is already quite low. It's at 29, so it's already in so-called oversold area. So what might be happening, we could rebound from this bottom of the descending channel and go all the way up, so somewhere to the level of 85, which might be up to 5%, so within the channel variation, up to 5%. Or what might be happening, we could break it downwards and then decline. It will mean we will open fast, actually decelerating channel, which is very nice moment to buy, because there will be also fast recovery and rebounds. So there are, in general, two patterns are possible. Further descending within the channel, it's the first one, meaning that we will kind of do upwards and downwards bouncing like a saw, actually forming the same pattern as already happening within the channel. And second one, we will form fast, let's say, deceleration, and then also a very fast recovery. So here we have two patterns we can still observe, and that will be how we will play. So the first pattern rebounds towards upwards of the, or let's say that the top ceiling of the channel would be our primary way of playing, and further breakout downwards and then faster rebounds will be a secondary pattern that we are going to play here. So this will define our buying selling strategies. And of course this means that, speaking of where to buy, we can just start buying already here in this level, because this is the bottom of the current descending channel, and if we buy there, could be very nice entry opportunity. So it would be between 79.85 and 82.53. So let's write it down here as our first call out. So 79.85 and 82.53. So this would be, again, with expectation that we will be still descending overall, but having some bounces within the current descending channel. And this is indeed going to happen and going to, let's say, further take the place. The strategy to trade will be quite simple. You just buy at the bottom of this channel, you can imaginarily continue it, and you sell on the top of it. So you just do it on the descending overall price, but you can do this way. And then profit taking would be quite moderate here, because let's say if we even go from 80, 81 all the way to 85, it will be around 5%. So speaking of profit here, I would say if the first pattern is working, it will be between 5 to 8% profit taking opportunity. If it's the, let's say the first, let's mark it with 1. So if it's a primary level working. If we go to the secondary level, then of course what might be happening, first I will write down the profit. The profit taking could be bigger, and profit taking could be from 10 to 15% there. And I will now explain what it means. It means actually that if we go really lower and form this descending, accelerated descending, it would mean that we should stabilize somewhere in this range, maybe even high a bit here. And with this being said, it will create also very strong push up, at least till the mid of the current descending channel. So here we will be able to make up to 10 to 15% profit, and the entry level will be 73.47 at the bottom and 76.40 at the top. And how to buy through those levels we will talk by the end of this video, because we do non-linear buying through. So this way you will have the best average down possibility here. So this is the second level. Let's write it, let's mark it. So this is the way to trade here if we go lower. So these are two so-called technical levels that we expect, and we always keep talking about the third level, which is let's say so-called risk mitigation, and it means that this is the level which we don't expect at all, but this is the level where we want to keep some money to buy through if something really bad happens, like negative catalyst related to bad news of the company or sector related or something like that. And this will be formed by these levels. It's just the money that we keep. It's not that we expect it at all, but just if something bad happens like news or something, we just want to have those money allocated to buy through. And this will be between 62.71 and 67.22. So we can put our third call out on this price. And again, first two levels, those that we can expect and trade through, and the third one is just so-called catalyst-based risk mitigation. So now coming back to original magnification. So these are three levels to buy. And again, first two are working ones, and the third one is just to avoid exiting with a negative, let's say, saldo at the end of this trading exercise. And with this being said, that's all how to trade. Still the final, we need to talk how to buy through, and because this is a classical pattern without any additional risks, it means that we can buy with actually let's say so-called 5 portions play. What does it mean? It means that the money we'd like to play here, you can split in 5 portions. Then you can buy with 1 portion at the first level. If the price declines further, you can buy with 2 portions through the second level, and the remaining 2 portions you keep just for so-called negative catalyst-based decline if we go to the third level, while others will be exiting with losses, doing stop loss. You just calmly buy there and prepare to exit with a very nice profit. As you can see here, we're not talking about any 15 minutes candles or 1 minute candle, because you don't need to trade here with this. You don't talk about any stop losses, so we're not going to buy time with money, but we just do daily candles, very principal levels trading through. You don't need to sit at your PC all the time, and we don't do any stop loss. So we just buy non-linearly through such a way that you exit with a profit or with the draw in the worst case scenario. So we are okay to wait a little bit, but we don't want to see any negativity at our brokerage account. And this is the way to trade for usually for big money or for those who look for secondary income. And I think the latter case is actually people who are looking indeed for an advice in YouTube. And that's why we post these type of strategies on YouTube at our channel. So if you like this way of trading, these strategies where you don't need to take losses, just spending a little bit more time, maybe in the worst case scenario, don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks. With this being said, that's all for PACCAR, and see you at another episodes.